Have you wondered what financial advisors actually think about finances? This is your sneak peek at the conversations within Financial Design Studio. Michelle Smollenberger, the CEO here, will be your host as you go behind the designs.
Hello there. Thanks for joining us for this episode of Behind the Designs. My name is Anna Lewis, and I will be your host again. Michelle, who we talk about as the host, will actually be joining us as a guest today. So thanks for humoring me, Michelle, and being our resident expert.
I'm happy to talk about any of these topics.
So in the course of this podcast, we've had a couple episodes about insurance, and we've talked about all of the different things that go into that. So auto, home, but we wanted to take a whole episode to dive into a very specific, very important element of insurance, and that is life insurance. Chances are you already know that this is important for you and your family, but you might still be wondering if you really have what you need or even how to use what you already have. So our goal is to break down each element of life insurance so that you have the clarity you need to make the decisions you need to make. So let's dive in. Michelle, can you just break down for us what even is life insurance?
Yeah, so life insurance, and we've all heard it, like you said, everyone's probably heard of it. Life insurance at just its very core is when someone passes away, so you're insuring your life. When someone passes away, you have this policy that you pay a premium for. Every year you say, I'm going to pay this amount. And if I pass away, someone is going to receive a sum of money. So if I pay $15 a month, then if I pass away in the next 30 years, then someone will receive $100,000. That's an example. So when we think about insurance, very commonly, we kind of say the purpose of insurance is to kind of make you whole. So if you think about if you're in a car accident, if something happens at your home and something breaks and you need to fix it, the purpose of insurance is to say, okay, well, I don't want to have to pay to fix it. I want my insurance that I pay for regularly to fix that thing because it could be expensive. So the purpose of insurance is to make you whole. So that's how we think of, insurance, very big picture, but life insurance is a little bit different, which we'll talk about. But that's really kind of the purpose is when something happens, when you pass away, when you die, that someone will receive an amount of money.
Right. So there are a lot of different types of life insurance policies that go into that. Could you just explain, some of the types that people might see or they might have heard of?
Yes. Yeah. So I'm going to talk about two kind of big types of insurance. There's really kind of two big categories. There are many types of life insurance, different types of contracts. One of the main purposes, as we were talking about today, is there's so many different types of life insurance and so many details within each contract. One of the cool things is we have done so many videos on this topic specifically, and Trevor on our team, who really digs into insurance when we're working with clients, he's gone into so much detail. So if you're looking for a lot of the ins and outs on contracts and things like that, go to those resources. I know we'll point you to them in the show notes.
Yeah, those will be in the show notes.
Yeah, so that's really kind of the purpose of today is to say, okay, we're not going to go into all of the details, but to really pull out like what's important about it. So what do I do with it? Or, kind of questions like this. But at its core, so kind of the two big types of life insurance, we've got term life insurance. So this is just for a term for a set amount of years. I'm going to pay you this amount per year. And if in that time that I'm paying that premium, that amount to you, the life insurance company says we will pay someone this amount on your behalf as your beneficiary. So just a term life insurance policy is just for a term of a period of time. So typically that could be 30, 20 years. It could be 10. It could be any length of time. The other type of life insurance, kind of the big category, is whole life insurance. And so the main difference with this is you can think about it this way, where that term policy, you're going to pay a premium, so an amount every year. And if something happens to you, someone will receive a sum of money on your behalf. With a whole life insurance policy, the same thing, you're going to pay that amount every year, and they're going to pay a certain amount if something happens to you if you pass away. So now you've passed away, a beneficiary receives that. However, what happens in the meantime is in a term policy, when I'm just paying this premium, at the end of that term, let's say you've been paying this premium for 30 years, there's nothing you really have to show for it. If you didn't die within that time frame, you didn't receive anything. Now, that's a good thing. That's really what we want to happen. We just have life insurance, as to protect us from the risk that can happen before we want it to. But the whole life policy, at the end of that, or even along the way, you are part of that money you're paying in each year is kind of going into a savings account. And you can think about it just very generally like that. It's being set aside. So if you decided halfway through the policy that you don't want to keep this and you're going to get rid of it, there might be an amount of money that's left there, kind of some of the premium that you paid in as an amount that you would receive. So you might, people might feel like, well, at least there's something from the premiums I paid. Now, this is where we can get into all the details of, one can be more expensive than the other. So it's not necessarily that, you're getting more back or less or paid in less, but that's where just very big picture, a term is, for this term, I'm going to get this amount. If something happens or if nothing happens during that time, then I don't receive anything. I just pay the premiums while I have the policy. The whole life, there's kind of a savings account also building up on the side. And so it kind of gives you a little more options of what you could do with that money. It's like a savings account you could do something with.
And like you said, those are the two big buckets, but there are so many other iterations and varieties beyond that. But we're just going to kind of keep those two as the examples we're going to use for this podcast episode.
Mm-hmm.
So where do you get these two types of policies? Who gives them out?
Yeah. So this is kind of one of the purposes, again, of today's episode. So I know if you're listening and you're like, I already know about life insurance, the thought is, let's think a little bit more of what you have and when you might want to use it or when it might be valuable. So we're kind of giving you other ways to think about this. Very commonly, if you work for an employer, this at some level is, if you're full-time, this might be a benefit that you receive from them. So you might get a small policy, but even on, for clients who are high income earners or a corporate executive, and that's some of what we're going to talk about is, a policy that maybe your employer is paying a premium for that is maybe much more meaningful in size. This starts to become something that you really want to think about how to use this or when and how long you need it. So usually you can get it from your employer. If you're a full-time, this might be a benefit. And then outside of that, it's good that you can get it from your employer, but it's also a risk because if you were to leave that employer, then that life insurance goes with you. And let's say that when you started there, you were young and now, maybe you're transitioning to a new job. And let's say now you're 50 when you're making this transition. Life insurance is all kind of based on your age and your health. And so you can see how the cost of starting can be different at those ages. So this is where, being from your employer can be helpful, but also having outside of your employer what we call an individually owned policy. So you going out and purchasing your own life insurance policy on your life, your spouse's life, can also be really valuable because then no matter where you work or if you're self-employed, whatever that looks like over the course of 30 years or your working career, then you have coverage wherever you're at. So that's where there's kind of two big pieces. They're both important and they both serve, important roles.
Right, for sure. One of the things you talked about at the start was how life insurance fills a role. How does that role compare or differ from other types of insurances that people might be maybe more common with?
Yeah. Yep. So one of the interesting things, so when I kind of said, usually insurance, the purpose of it is to make us whole. So if we're in an accident with our car, the goal is our car is going to be fixed or we're going to get paid to, purchase a new one or put money towards a new one so that we're made whole. We have a car to drive. So we're kind of back where we started. With life insurance, we can't do that. Someone has died. And so we can't just the money that you're going to receive doesn't fix that, doesn't bring them back. And so that's what is unique and different about life insurance is because it's filling a role that that person had who did die, it is filling the role that they had. So for example, if they were working and they were, let's say they were the full-time earner in the home and the other spouse stayed home full-time. That person who died now, who was the person earning that income, now, we were dependent on them. And so now they've passed away and we need money to be able again to, fill the needs that we have expense wise. And so it's filling that role of now bringing the finances into the family like they were when they were working. So it doesn't make you whole in the sense of that person, being with us, but it fills a role that their earning potential was bringing.
Yeah, so other types of insurance are almost a kind of undo button that gets you right back where you started, but you can't undo something like a death. And so in that sense, you need to think about life insurance a little bit differently. You need to think about it fulfilling a function. And so that when you're thinking about kind of life insurance you need to get or what kind of coverage you need to also be thinking, what's the gap that I'm going to leave?
Exactly.
So as people start to consider and think about their own life insurance policies or maybe even getting a new one, what factors are there that they should look at and consider when making that decision?
Yeah. So commonly just, kind of a phrase we'll tell people or ask people a question is, when they say, should I have life insurance? Or if you find yourself asking this question as you're listening to this, whatever life stage you're at, should I have life insurance? Because that could be you saying, should I be getting it? Or should I be keeping what I have? So there's, different stages. People are asking the question differently. And so what's interesting is we will commonly say, life insurance is important when you love someone or owe someone. And what I mean by that is when you love someone and your earning potential, so you working and bringing in money to your household is really valuable. If you're no longer living, then that money is still needed if your spouse isn't working. And so it's things like that where if you love someone and you want to take care of them and their future needs, so whether that is college, whether that's, college for your kids, whether that's retirement, it could be any need, weddings, these are commonly what people think of. I still want to make sure that I'm providing for these things for them if I'm no longer alive. So that's if you love someone. And then if you owe someone, so again, commonly if you have a mortgage, an auto loan, things like this is what we start to say, maybe you're really young, you've just purchased your first home. And so that's a large amount that if something happened to you, then your spouse is going to be left with that mortgage payment alone. So do you want your life insurance to pay off any mortgage that would be there or to help make the payments, however they choose to use it? But these are the types of things we start to think of that it would cover if you were to pass away, well before we hope you do. So that's kind of just a quick way that we kind of phrase it or how to think about it. But some of the factors, I guess, in knowing kind of you have the right policy and that you have what you need is in those scenarios. So kind of following that same type of thinking is, well, how much were you earning? How much were you making? How much is needed? So we have to start to kind of add up what those needs are if something were to happen to either of you, whichever spouse it is. Because even if it's a spouse who does stay home full time and doesn't work, they're still providing value, whether you're not having to, pay for a caretaker, like a nanny or babysitter, or some of those things, cooking, grocery shopping, like just a lot of things that happen in the home. I'm just giving some examples, but there's a lot, we each bring value, and whether that's an actual dollar value that we can say, okay, this amount is coming in because of this person, or this much is being saved because of what this person does. Like everyone has value. And so those are the types of things now as you go down this line to say, okay, so how much should we have? And so that's kind of a starting point of just starting to understand what you need. And from there, it's just making sure that you're not overpaying for what you need. So it's getting the right type of policy. So whether that is, term or whole life, and then in the right amount, and then, just based on your factors, your health, your age, that's where we see these policies, we see premium amounts all the time. So we have a really good idea of what should be normal. So we can tell you pretty quickly if you're paying too much based on the circumstances, or, we may just recommend, hey, let's just get a quote and compare them. So these are types of, kind of more of the details as you actually get to the place of, okay, now let's see what policy I need and what the cost is going to be.
Yeah. Yeah. So another thing that people often hear about life insurance is the type of coverage you have and whether you're overpaying or not. And so people will come and ask us like, hey, are we overpaying for our coverage? What do we need? And the answer is, it depends. It depends on your life stage. So as you, a financial advisor, think about the different life stages that people might be in, what are some coverages that they should be looking to make sure they have?
Yeah. We can get into so many technical details here. With life insurance, the thing is when you get the policy, you have to have an insurable interest at the time you get the policy. What that means is that I basically have to have a reason that I'm getting this policy on someone's life when I'm getting the policy. So, for example, if I'm the employer, I'm offering a life insurance policy to, our employees because I want my employees' family to have the ability to have life insurance and funds if something happens to my employee. I care about them as a person, as an employee. And so likewise, a company could say, well, we have a corporate executive and this person provides a lot of value to this business. They bring a meaningful impact to this business. And also, this person is a part owner and this person owns a portion of the business. And if something were to happen to them, someone needs to buy that, or their family needs to pay for that or buy that, or whatever the dynamics are, there's different reasons of why life insurance is used. And so what's important is that with life insurance is it's at the time that you get the policy. It doesn't matter that for the whole 10 years you have the policy or the whole 30 years that you have, an interest in that person or for that need, but it's when you get it. So that's what's interesting because with home and auto, it's you have it on your existing home, your existing auto. You always have an interest in that the whole life of the policy, essentially. So that's something that's a little bit different. The reason I mention that is just because it speaks a little bit to the reason you have the policies in place. And this is where it can simply be someone trying to provide for their own family if I'm getting my own individual policy. It can be an employer providing for their employee or giving them that benefit to be able to purchase coverage, maybe at a little bit cheaper cost than they could on their own. It could be a business trying to ensure an ownership interest where they want to make sure that the business has a policy that if there's a lot of money that this person owns in that they can actually pay that out to the family. And instead of just saying, well, we're going to have $10 million set over here in this savings account, just sitting here, for if that happens, it's cheaper if I buy a life insurance policy for $10 million. And if it's needed, we pay the premiums, but it's not $10 million, that we're having to just have set aside here. Mm. So it fills a need if something happens, if the risk that you're trying to avoid happens. But it can be a much more cost-effective way of doing it. So this is where there's just so many different reasons people get life insurance policies. I mean, we could think of sports, coaches or players, and there's just so many different reasons. So it really can be for any number of those reasons that you get policies.
Yeah. And as you are looking to get coverage for your life stage, what are some things that you think about as an advisor?
Yeah. So I think this is where this is where this question of kind of like what life stage are you in? Someone who's young and starting a family, it's really important that you have a policy in place because you're just starting to, raise a family, to have kids. You're just starting, maybe you've just purchased that first home or you're early in owning your home. It's very common that when we're young, we don't have all this money saved that we're starting out, living life to just pay these bills that are going to come. But as we work and as we save money, then we start to build up meaningful savings. And so now you start to ask yourself the question, well, do I need this life insurance? So in the beginning, it's yes, you need to have this in place. It's very important. Then as you go on between life stages, it's do I need to keep this? And what are the reasons that you would or wouldn't? One of the other things for young families is it's not, sometimes when couples talk about this, they may not like the idea that their spouse is going to get this large amount of money, and that it can almost be seen as like, oh, well, would I rather have you alive or not? And that sounds awful, right? But it's a thought that I think goes through people's minds of, that's a lot of money if you weren't living that I would have. And the purpose of that, and just to kind of help that thought, because it's natural, we think about that. The purpose of that is that if something were to happen to your spouse, so if they died, you want to have money that you're going to be able to transition. You're going to be able to decide, well, are we going to stay living in the home we're living in? Am I going to go back to work? Maybe I was staying at home and I was the provider that stayed at home. Well, now I need to go look for a job because I haven't worked for the last 10 years or whatever that is. It allows time for the surviving spouse and family members to kind of transition and to find and to decide, what is life going to look like now? That's the purpose of, life insurance. And so having whatever the amount is that you decide is necessary, whether it's, a large amount, a meaning, could be meaningful to different people, different amounts. But the important thing is that you're allowing a time for your spouse to figure those things out, for your family to figure those things out and decide. And it may be that, they don't have to go back to work, but you're not necessarily trying to have this large amount of money so your spouse never has to work again. If they want to, obviously they could decide to, but if they don't have to, then they have the opportunity. It's just, that's really the purpose. And so sometimes I think when we talk about life insurance, it just seems like there's such big amounts, that people get life insurance for, like, wow, $1 million, that's a lot of money. But when you really think about the rest of life that needs to be lived and the expenses that might come up in that time, whether it's college, weddings, cars, whatever that is, that's also a meaningful dollar amount. And so I just, it's just funny because, people will say things like, oh, I don't know if I like that you have that much life insurance on me. And I know it's kind of something that, people kind of laugh and joke about, but it is, just kind of like really explaining that and helping people understand this is why. And when you really add up what's needed, it is a big dollar amount.
Yeah. So young families, 100% yes. What about professionals who are a little bit more established in their career? Maybe their employer is providing them a life insurance plan.
So I guess when you talk about like professionals, you kind of said, what do they need? Very similarly, we're really just kind of building on these things. You personally need all of these things for you and your home and your family. But then also, professionals a lot of times might have employer stock, or they might have the option to buy into a business, or they might be an owner in a business, or they might need to buy out of a business. There's all of these different, again, ways or uses for life insurance. And so this is where professionals sometimes find themselves in these positions where they actually need to have money for that liability. They may have started buying into their practice and still have a note that they have to pay on. So, a loan that they're still taking out to buy into the practice. They might have 2 more years that they still need to pay on. And so that life insurance can cover that amount. And then the business, if you pass away, now the business can actually pay your family out your portion, but you still kind of have to pay what you're owed. It can be for a variety of different reasons. And there's different circumstances written into, these notes and these buyouts for these reasons. But it's just important to note and to highlight that that's kind of the purpose that it can play for professionals, that maybe just an individual who's, just kind of a W-2 employee doesn't have, the option to buy into a business. That can be different for a professional in that manner.
Yeah. And so then comes the final stage. What about for people who are retiring or are retired? Do they need life insurance, and what kind of coverage should they be looking for?
Yeah. It's interesting because we kind of say like the final stage, and hopefully, like when we think about life, they're kind of these like big groups of stages, like stage 1 could be almost like a 30-year career. And then retiring can be another 40 years. So while we say, it might be okay, the next stage, that's a long time.
Yeah.
What's really interesting about this is that, you want it. So with people who have policies, so this is sometimes one of the biggest places for opportunities that people have, because you could have life insurance policies that, again, if you're a corporate executive, if you're a high income earner and you've worked at a company for a long time, you might have, a different buyout packages. And you also might have a life insurance policy that your employer has actually purchased for you over time. They could have been paying the premiums and you were paying tax on that as income. So now you have this policy, let's say it's a whole life policy that has all of this, built up cash surrender value or policy value in it. For some people, we'll see this amount could be $1 to $2 million of money that's set aside just in this life insurance policy. What's interesting is now you have to ask yourself, do I need this policy? So a lot of people are saying, do I even need this life insurance coverage anymore? And that is one question to ask. But the next question is, or what can I use it for? And so this is where money that you've put into that policy, up to the amount of the premiums paid, so your basis, for example, that money can be taken out tax-free because you've already paid tax on it up to that certain amount. So now we have a different type of investment account, essentially, that we can take money from in retirement. So this is where we have to ask ourselves the question, okay, do I need this insurance? Because now it feels like, all of those needs that we were talking about, whether it was retirement, which now you've already saved for if you're getting ready to retire. Your kids have probably had their weddings, most of them, and now you have grandkids. They're probably through college. And so a lot of these needs have already been fulfilled. And so now it's, do I even need this? So instead, we ask ourselves, what can we do with this? And so I think that becomes kind of one of the exciting opportunities that corporate executives or high income earners have with policies like this. So this is where I just want people not to quickly dismiss, the life insurance they have. If you're past all the needs that you initially got it for, then you just change the questions that you're asking yourself about it.
That's a great point, that sometimes you need to ask different questions instead of trying to get out of or cancel something. That perspective shift could give you $2 million, depending on your policy. One of the things that we also hear as financial advisors about life insurance is all the mistakes that people make, how people get trapped within policies they don't need. So can you just share some of the common mistakes that people can look out for and be on guard against when it comes to life insurance?
Yeah. Yep. Yeah. So just a few kind of off the top of my head that I can think of. The first is just not getting it in place at all. So a lot of people, younger people might say, oh yeah, we've been meaning to do it. We've been meaning to do it. That's the first one. So be sure you're getting it in place. Kind of that if you love someone or owe someone. The other is just not having enough in place. So again, you can kind of have that basic amount maybe from an employer, but if you haven't really gone through the that equation or kind of really doing that projection of how much should I have and how much could my needs be, not having enough in place can be another one. The other could just be having all your coverage through your employer. So again, while it's a benefit and it could be more cost effective, if everything is through your employer, then it could also be a really big risk. So just making sure you're having something outside of that as well, an individual policy that gives you some protection if you were to lose your job or want to change jobs. Another is just, very commonly, people will start in a job and they'll work there for a long time. And so if you think about when you maybe started at your first job out of college, if you're still there 20 years later, the person that you would have named as your beneficiary might have been someone like a parent or a sibling. But 20 years later, a lot of life has happened and you probably, if you've gotten married, you might want your spouse as your beneficiary rather than a parent or a sibling. So just commonly people don't update those things because, we aren't reminded of that frequently. And so just updating your beneficiaries, that's common. People don't, update those. And then I think the last one is really just how much is too much to be spending. So reevaluating the coverage that you have, just making sure every so many years saying, is this still a good policy? Is this still what I need? Could I be doing something different with this? What should I be doing? And really you're evaluating this based on your age and your health. So those are really the two big things with life insurance that determine the price. So really getting a second opinion. And I would even say, if you're getting that second opinion kind of from the person that you're purchasing from, I would say get a third opinion, just another opinion outside of your own and then the person you're purchasing from, just to kind of have, reassurance. That's why we always like to look at these things for clients, even though we don't sell insurance. We know we see these all of the time. It just gives you confidence that, what you have in place is what you should have, and you're not overpaying for it. That's a reasonable amount. So just kind of having that confidence from people, that can really be helpful.
Yeah. Because insurance is such a big part of your financial plan. It protects everything that you've accomplished so far. And life insurance is just another piece of that. One of the things you kind of touched on before was how you can use life insurance. It's not always just somebody dies and now that money is supplementing income. So what are some other ways that life insurance policies actually can be used?
Yeah, I mean, it can be life insurance. So essentially when we talk about this whole life policy, this is where every policy is so different and there are so many different versions. So depending on the company you're purchasing it from, this is where it depends. Let's say you have, that whole life policy with a savings account value, just kind of this cash surrender value that's adding up over time from the premiums that you're paying. A lot of people will kind of be sold life insurance when they're young. Again, that's when it's cheapest, is when you're young and healthy, because there's a smaller chance that you die when you're young and healthy. So that's why it is cheaper. So a lot of people will get it when they're younger, and they may, get a policy sold to them by a friend who's kind of going into maybe insurance career. And so a lot of times we'll hear from people saying, oh, I have this policy, but I pay a lot for it. I've had it for a long time. So it could be, it's not uncommon that someone could even have maybe like 10 to 40,000 of cash surrender value, just kind of building up in this, savings account. It's just kind of building up there. So when I talk about, someone who's been paying in for maybe 30, 40 years of a career, and the employer's been paying in, and we're talking $1 to $2 million, there's also on the flip side of that, a lot of money is, could even just be 10,000 or 40,000 that you've been paying on premium. So I'm not saying like it has to be this huge amount, but even that is a meaningful amount to pay a semester of college or a wedding or a new car or first car. When you think about these funds coming out, like it's money that you've saved, just like any other money that you've saved. So it's money that can be used, and it can be taken out of your policy, again, depending on all of the details of the policy, but it can be used for anything. And so that's where, it's really just, it's remembering that, yes, insurance serves this purpose of protecting everything, but it also can give you opportunities depending on what you have. So this is why we always want to know, what everything that's going on with your finances, because we may look at that and say, oh, we didn't have money to maybe start that college funding or something, but you actually do have that over in this policy. If you moved it here, it would benefit you in this way, and you could earn more with that, whatever that is. It's just explaining those pieces and, oh, well, let's use it for this instead of this, because that isn't the need right now. So really anything it could be used for.
Yeah. So for a beneficiary, when somebody passes and now that they're given this life insurance policy, how do they claim it? What do they do with it? What does that process look like?
Yeah. So when we think about it's very similar to kind of any type of insurance. You have to kind of prove that there was this loss. So for life insurance, that's usually I need to get the death certificate. So you're going to get that proves that your loved one did die. And here's the details. That's what the life insurance company wants to see. That's common. And then they'll likely have their own form. And so on this form, you're kind of detailing out, are you going to get this in a lump sum? Are you going to get this over time? It's very simply, it's kind of completing the paperwork just to confirm that you were the beneficiary to this policy. And so you are to receive the funds. So at, kind of its basic, most core process, that's the process there. What's nice is you can receive these funds. It could be that it's over a period of time or just a lump sum. So it depends on the company. Also depends on the type of policy. And what's interesting too is some companies will actually allow you, let's say that you were to receive $500,000 in a life insurance benefit. They may say, well, you could just take these, receive a check for this and put these wherever you want, or you could take this money and we have, our insurance XYZ company, and you can just leave it in our savings account and it's going to earn 4% per year. And so you could just leave it kind of in this interest bearing account at the life insurance company. And again, like anything, you just want to evaluate, is that a good place to leave it? So is earning that 4% better than what I could be doing or what I would be doing with it wherever else, the other options that I have? So again, you just want to evaluate it, but that is a common thing. If you do that, sometimes it can be kind of more kind of time exhaustive to get money from it. So for example, it might take a couple weeks for you to receive that check. It's not always as easy as them just depositing money into your account. It doesn't always work that easily with life insurance. Again, it depends on the company. But I have, from several clients who have used these over the course of the years, when interest rates were really low and you could earn 4% on this money sitting in this account, like that was actually really attractive. So clients that have used them over time, they aren't always the easiest. And once you take the money out, you can't necessarily put it right back in just to say, oh, okay, I took it out, but I still really like that 4% interest rate when I can only get 1% somewhere else. That's what you need to be careful of. So it's kind of a way for them to offer you, a way to take money out and also, kind of leave the money there. But just knowing, there's different options like that for some companies. So sometimes that's available. And then one last thing, a lot of people, I think what's interesting is with the value of estates, people, often think I want to give my money away maybe before I pass away, or they don't know if they want to. And so let's say you're someone who hasn't given money away throughout your life and you're really waiting until your death to actually allow your beneficiaries to receive money, because you don't know if you're going to need that money during your life. You might need it for your own care. And so let's say that you're someone who has a large net worth. Life insurance can just simply be used to even pay estate taxes or taxes after your death. So, it doesn't have to be some really big grand strategy where, we're trying to avoid taxes or not, if we can take these out, then we're only going to pay, we're going to pay less. It doesn't have to be really complex. Some people, I think, when they're thinking about assets that someone else is going to get at their death, they don't necessarily want to do that while they're alive. They just want to wait. And if there's something left, then they'll receive them. And so very simply, your life insurance policy can be used to pay for any expenses or taxes that come up after you do die. And there's nothing wrong with that. So, just letting people know it can be used in so many different ways. That can kind of be the last money. If you spend everything, that life insurance policy can be the thing that your beneficiaries receive. So everybody thinks about this differently, the ways they use it, why they have it, things like that. And so, hopefully that just kind of gives people kind of a little bit of brainstorming of kind of the ways that you can use it or what it's.
Yeah. So as we start to wrap up, do you have any final thoughts that you just want to share about life insurance?
Yeah, I think one of the big things that I was kind of thinking as I was just talking is that what's interesting is in the beginning, when we talk about a young family, we talk about the purpose of life insurance, and it's really important because you don't know what's going to happen. And when you're young and you don't have a lot of money saved, life insurance plays a really critical role. What's interesting is I start talking about someone who's older, and now we're saying, well, this life insurance can be used to pay estate taxes or something like that. What you find is life, if you have a policy for 30 years, 50 years, if you have a really long-term policy, the need and the reason you have it is going to change throughout your whole life. And so it's not always going to be when you're young, you need these funds. Well, now 50 years later, when you're older and you're, either whether you're protecting for something or you do want to make sure maybe there is someone who you need to actually still provide for. And that's why you're keeping this policy, because they're going to need this money. Because things like Social Security, this income doesn't continue once you die. And so life insurance could still be needed for someone else. Maybe it's a grandchild or a child who has, physical needs that they actually need money to be able to care for their life. So it can be used for so many different things. And I think that's the interesting thing to me, is that it changes your whole life. As you think about why I have this, it can be different at every one of these stages and points. And so that's why it's thinking about it as why do I have this? Why should I still keep it? And what can I use it for? I think those are some of the questions to really be asking. So yeah, I think it's just helpful for people to think through those, and hopefully this just offers a different perspective of, something that we commonly hear about and kind of think, okay, yeah, I know I need it, but just a different perspective of it can actually do a lot for you too.
Sounds like life insurance is a lot more versatile than most people realized.
Yeah.
I mean, certainly myself, I did not realize that there were so many things that you could use it for.
Mm-hmm.
With that, our episode on life insurance is coming to a close. But before you go, we have a whole bunch of resources on insurance and life insurance specifically. So if you are looking for more information on a super specific topic that we mentioned, head over to our show notes on our website, and we will list all of those titles so you can find them super easily there. But maybe you're tired of searching for these answers yourself and hoping you get it right. You don't have to go it alone. So you can reach out to our team with questions that you have regarding things like life insurance and how it works with your financial plan. We would love to talk with you and help you. You can reach out to us at our website, financialdesignstudio.com. Until then, we release new episodes every other week, so we will talk to you in 2 weeks.
Thanks for listening. To find any links or resources related to this episode, check out our show notes. Your host was Michelle Smallenberger, a certified financial planner and CEO. The guests featured are from Financial Design Studio, a team of experienced, fiduciary, fee-only advisors based in Chicago. Anna Lewis is the executive producer of the Behind the Designs podcast. And as always, for more information about Financial Design Studio and who we are, check out our website, financialdesignstudio.com. And final note, no content discussed on this podcast should be taken as financial advice. Financial Design Studio accepts no responsibility for your individual choices. We'll see you in the next episode.